Happy Tuesday, guys. Hope you guys are having a phenomenal week thus so far. It's a little wet out there, especially here in the Florida area. But I want to come on here today and share with you guys different ideas as far as what's going on with the market, how to prepare for not necessarily negative changes with rates, but essentially big announcements that are going on with the Fed that are going to impact rates this week, positive or negative. I also want to share with you different programs that are out there that are not related to mortgages, hence the rental moratorium that's ending in the next couple days. And I also want to talk to you about condos, especially if you're in the market looking for condos or at least condo financing. I'm seeing a lot of that these days. So we're going to be touching on all these different topics today. Please leave your comments in the comment section. I'm going to be checking periodically so that way I can give you guys informed information. I mean, hence this is Smart Money Tuesdays, and I want you guys to make smart financial decisions. Oh yeah, peep out my little mascot. Let me know what you guys think about my doggy there. I haven't named him yet, but maybe you guys can help me name him. So he's going to be our new mascot, if you will, for Smart Money Tuesdays. So let's jump right into this, if you will. Let's talk about mortgage rates, where they are headed, what's the trend, things to be looking out for. So we're going to dive first things first into the technical aspect. We've been charting this for some time now, back from the 14th of June, and we've had this rise. You can see on my screen here, essentially going up in pricing means that rates are getting better. That's the best way of putting it. And so anytime you see red, that essentially means rates are loosening or weakening, if you will. This is all contingent on the pricing of the rate. So when you see pricing come down, it doesn't mean that rates went from a 3.125 to now they're a 3.5. It simply means that the rate is the same, but the price for that rate could be a little bit more. And I'm going to touch on that as we dive through the rates and things that you should be looking for as a consumer if you're shopping online. But first things first, let's get educated on what you should be aware of. Now, right now, national average as far as rates, they're floating anywhere from 2.8, 3.125, depending on the product and program, but that is a national average. Contingent on credit score, it's really going to determine how much in points or costs it's going to be associated with that. And if you're looking at the chart here, if you're trying to minimize how much costs you're going to have for a specific rate, you obviously want to lock in when any one of these candles are green. And what I want to share with you is what to look out for as far as the trend that it's going towards. This little squiggly blue line that you see right here, this is a 200-day moving average. And essentially, we've hit it a couple times and we've been rejected. You can see this candle over here back on the 19th. I believe that's July. We were rejected even with this strong red line of resistance. So essentially, sellers don't want the price to go beyond that. So they're selling more of it, and there's not enough buyers to push the price higher. And so the floor, if you will be right around here. Oops, let's take that off. Will be essentially right around here. So what does that mean to you as a consumer? It's like, well, Michael, I see a bunch of lines. What does that mean to me in my bottom line, my pocket at the end of the day? So you're going to be looking at a difference of anywhere from $500 in pricing. And again, this is depending on the loan size. Let's say it's an average loan size of roughly $350,000. You're going to see a difference in pricing for a specific rate anywhere from $500 to about $900. You'll see that variance. So if you're trying to secure a specific rate with minimal costs, you want to try to do it somewhere right when it touches this line. So maybe on the 29th, which I don't know if that's going to be possible. When's the 29th? Yeah, the 29th is Thursday. The market closes on Friday. So between today and the 30th is probably going to be the best times you want to look into locking. And here's a reason why I'm saying that is because the Fed is having a 2-day meeting, if you will, yesterday and today, and they're going to be having more announcements tomorrow. And those announcements that they're going to be sharing with investors is essentially if they're going to start tapering off mortgages. The Fed has been buying a huge amount of bonds since the pandemic, and now we need to come off of that teat, if you will. And so that's just a layman's way of putting it, that they're going to start tapering mortgages. And when this happens, you typically start to see rates start to wiggle, if you will, as far as the pricing of them. And so that's something to be made aware of, because if they come out saying that they're going to start tapering this year, you should expect to see either a dump or sell off in the market where pricing would fall essentially to this support line right down here, this little blue line. If they come out and say, hey, we don't plan on tapering mortgages until later in next year, then you could see pricing start to pump up a little bit more, which would give you better pricing for a specific rate. At the end of the day, when it comes to mortgage rates, rates are still phenomenal, still near historic lows. As I mentioned, an average rate is going anywhere from 2.875 to about 3.125. This is a phenomenal opportunity for you to refinance in the event that you purchased a home a year ago, sometime when the pandemic was just kicking in, or maybe you were refinancing at that time and you were closing somewhere around 3.875, maybe even 4%. I've seen some scenarios, if you go back on the chart, which I won't bore you with that stuff, but pricing got a little out of hand at that time. And if you were in that cycle, if you will, if you got caught up in that because you had to lock, you had to close at that time, I wouldn't squander on the opportunity of changing that. It's still a good opportunity for you to get rid of mortgage insurance because home values are still up, appreciation is still up. We're going to touch on some final thoughts as far as market crash and things like that a little bit later in this broadcast. But what I want you to know is that there's still an opportunity for you to take advantage of that. When we get into 2022, 2023, and there's possible recession that we're going to be hitting, not necessarily rates could be a lot worse. It just, you may be in a situation where you may not be able to refinance to eliminate mortgage insurance, or you may not be in an opportunity to pull cash out if you have a specific project or debts that you want to get rid of. So that being said, let's go back to the other aspects here. Let's move along. I want you guys to see the current price mortgage rates. Is it this one? No, it's going to be this one here. Okay. So I'm a one-man band over here. So if you guys like how I'm doing some of the broadcasts now these days, drop some of your comments, hit that like button, share this. This is something new for me as far as going live on YouTube. So I'm enjoying it all together. So there may be a little bit of delays because I'm hopping between screens. Nevertheless, this is what I wanted to share with you as far as pricing goes. You can Google this, what are mortgage rates today? And you'll find a bunch of different links that are out there. Bankrate is a very popular website, and it kind of gives an idea as far as where are all the rates with different investors, different banks, brokers, internet lending companies, if you will. And so there's a whole bunch of them. Here's what I want you guys to see. A consumer sees 2.6, 2.6, 2.6. I'm like, oh my gosh, rates are so low. How come I'm hearing 2.875? How come I'm hearing 3.125? Well, here's the reason why. These rates, and I did this scenario based on someone with a 660 credit score to about a 679. This is based on a 30-year fix, being compliant. However, if you look at these sites, look right here, guys. They're charging you points. And I don't want to dissuade you that points are bad, because points can actually be a huge advantage to you and your family, especially if you're self-employed, and especially if you have benefits with tax deductions such as write-offs. But if you aren't prepared to pay points, or you have a specific budget that you can spend getting into a home or refinancing your mortgage, you may not want to be looking at points. And all I'm getting at is this: make sure that you make the comparison based on apples to apples, right? Based on loan size, based on credit profile, and based on program. Those are going to be your main components when it comes to identifying the best rate that's for you and your family. So that's something to be made aware of. I wanted you guys to see that some of the information that you see out there as far as interest rates wise, it's not really pertaining to you. It's just giving you a general idea. And you always got to look at the fine print when it comes to the costs associated with it. Most super high attractive rates right now, again, like 2.6, 2.5, anything like that, yeah, they're out there, but they're coming at a cost, an additional cost. So just something to be cognizant about altogether. And like I said before, it's still really a great time to refinance in the event that you're looking to get rid of mortgage insurance or tap into some of your equity. That being said, let's move over to programs, because there's a couple things going on in the market right now. Let me switch this around, if you will. There's a couple things going on in the market that are that has to do with rental moratorium, if you will. That ends in the next couple days. The end of this month? And geez, I don't even know what day of the week is anymore. It's the 27th. So the month ends on the 31st. Rental moratorium ends, which essentially gives landlords, the power, if you will, to remove a tenant that hasn't been paying, or maybe they're just getting ready to sell the place. And so evictions are again more prevalent, but more so, if I'm looking at my notes from earlier today, I was kind of doing some research on rents, and rents have increased. It's a large increase, and we're talking about from March of this year, 5.6% as a rental index, a national average, just all around. So if you're in a specific area, or if you're renting, if you notice that your rent has gone up, believe me, you're not alone. There's a lot of people that are in those circumstances, which is kind of mind-boggling, because with rental moratorium going into play, and a flood of individuals not only being evicted, you're also going to see that there's going to be a small wave, I hope it's small, of foreclosures. I mean, essentially, you don't have people paying rent. It's hard to get people in there because rents are being increased. You're going to see an adjustment to, again, the foreclosure number, if you will. Now, homeowners still have that forbearance or forgiveness, if you will, for their mortgage payments. So as long as it's a Fannie Mae or Freddie Mac type of loan, they actually have that forbearance forgiveness up until September 30th. So you still have, time, if you will, if you're still trying to get back on your feet, or still trying to drive revenue, so that way you can pay your mortgage on time. You still have the opportunity to file for forbearance. Which it's not concerning for that. The biggest concern is going to be the whole wave of foreclosures that we could potentially see with evictions, and essentially, some landlords are not getting the help that they needed when they passed all these bills to help homeowners and help essential landlords, keep up with their payments. Florida has a ton, and we're talking about millions and millions of dollars, and I think there's only been like an eighth of that has been dispersed. So if you are a homeowner, I highly recommend, or if you're a landlord, I highly recommend you reach out to either your state senate, reach out to somebody as far as discussing how you can get your hands or get help when it comes to forbearance, especially even if you're renting, if you still need rental assistance. The programs in Orlando, again, they'll be gone in the next couple of days. So it'd be very lucky if you do find a program, but you might want to try your opportunities with that. Now, I mentioned earlier today that programs, things to be looking out for are condos. I think that's going to be the biggest kicker, if you will, over the next, probably over the next year. See, when the market crashed in 07, 08, a lot of investors put a lot of overlays, a lot of different stipulations into condo financing, and really just kind of summarizing and making it simple, if you will. Condos need to go through 2 layers of approval. And so if you want to purchase one as an investment, from a professional perspective, I would wait until we go through this wave of what happens next with either foreclosures, or if there's a wave of that, because I think there's going to be a discount on those. And I'm not sitting here saying that there's going to be a market crash, because the data shows a completely different analysis. Home appreciation is still going up. And so, the whole doom and gloom talk that the market's going to crash, the comparison that they're making that to is the 07, 08 market crash. And yes, any Joe Schmo on the street could buy multiple homes and have multiple loans. However, we're nowhere near in that same circumstance. I would firsthand know, because of all the red tape and compliance that's involved with just getting a home mortgage these days. And so the whole market crash aspect is something that needs to be viewed at from an educated mind, if you will. Will there be a slowdown in purchases? Yes. Does a lot of that have to do with new construction? 1010%. One of the largest builders in the country, D.R. Horton, has intentionally and specifically slowed down their production because supply and demand, as far as actual supplies, are not at the same rate. There's less supply, so, and there's still high demand for new construction, new homes. So you see a slowdown in that sense, but it has nothing to do with homes falling in value and crashing, things like that. So if you hear that, no, you got to take that with a grain of salt, if you will. Now, keep in mind, as I said before, we don't know what's going to happen after this rental moratorium. Are we going to see a large wave of foreclosures? I don't know. Is that my speculation? Yes. Is that going to be a good opportunity to look into buying one of those said units? Absolutely. Especially if you're either looking to become, a first-time investor, or maybe you just want something small for yourself, something that you don't have to maintain. That's something to look into. Now, when it comes to condo financing, there's some things that you should be made aware of. And it has to do with, let's go ahead and interact with this. It has to do with, like I said before, condos needing 2 approvals. If you're doing an FHA mortgage or anything like that, then there's a different set of guidelines, if you will, versus conventional. But both programs require what's called a condo questionnaire. One can be limited and one can be a full-blown one. Full-blown really has to depend on how much you're putting down and what your loan to value is based on what you're borrowing. And so I'm sharing this with you because you could be the perfect borrower, have great scores, have the money to put down. Your debt ratio is super low, but if the condo can't get approved, then everyone's kind of SOL. And so there's some due diligence that you want to take on your behalf before you want to actually dive into, hey, this is going to be the home that I'm going to purchase. And what I mean by that is have a strategy. You're going to buy a condo, have that conversation with your lender, knowing that you're buying a condo, so that way they can provide you with the condo questionnaire for their company. You need to get in contact with the HOA, or at least somebody at the HOA. Main reasoning for that is because that condo questionnaire is filled out by the HOA. And so sometimes, and a lot of times, they charge a fee for that, and that's charged to you as a consumer. It can be $150, $250. They all vary. It's not a lender fee. It is a HOA fee. And so once that is provided, I feel that if you can provide that to your lender, or at least your lender can obtain that, your approval for a home mortgage on a condo is going to be that much cleaner versus getting your offer accepted, going through getting inspections, going through getting an appraisal, then getting the condo questionnaire, then sending it into whomever their committee may be, only to find out that, hey, we can't get this condo approved, which you'll have to change your financing. You'll have to go to a different type of lending, if you will, which may result in either higher rate or higher fees. Not doom and gloom, but it may not be the scenario that you're looking for. And you may find yourself in a situation where like, ooh, I'm pinched. I have to close on this transaction because I already have money invested into it, or I'm already in escrow and, there's no real means for me to get out of it at this time. So just be aware that condos do need that. As a consumer, you can go to a site. Let me share this with you. You can literally go to Google and type in FHA Approved Condos list. You'll see a couple links there, even some banks like Quickens, things like that. Avoid those. Go directly to the source, which is HUD.gov. And you can type in the state of where you're purchasing or refinancing. If you know the county, or maybe there's specific counties, you can type it in. Typically what I like to do is just kind of punch in a zip code and kind of give me an idea of all of them that are available, or at least that are approved within that county. So this is an example of the gatherings of Lake Cove. Is that what it says? Gatherings of Lake Cove, Lake Nona, gatherings. So this shows that it's approved. It was approved, then it expired, then they tried to get approved again. It was rejected for some weird reason. And then it got approved again and expires in 2023. So if someone were looking to do FHA financing on a condo in the 32827 Lake Nona area, this would be a good condo to look at. I'm not saying that these condos are great. I have no idea what the conditions are. All I'm saying is that's kind of where I would start. If it's not on an approved list, as you can see here, one of them was rejected or is expired, the lender can work to get them onto an approved list. And that's what I was mentioning before with condos is you got to go through 2 layers. And if it's FHA, it's almost like a 3rd layer. Because once the condo questionnaire is completed, remember the condo questionnaire being the item that's needed for Fannie Mae, and it's the same thing for FHA. The forms are a little bit different, but you're essentially going to need a condo questionnaire. And guys, you can pull this directly online. Just if anybody's ever curious, I can point you in that direction. But you would need that completed by the HOA, and then you would need to send that form directly to HUD, where they can review it to make sure that the eligibility for the condo meets those requirements, and then they can put them on an approved list. So if you're hearing a lot of what I'm saying, time is going to be the biggest component when it comes to condos. It's difficult to get a quick, fast close on those because of all those extra layers that are involved on those. And some people may ask, well, is it even worth it to own a condo? Yeah, it is for investment purposes, in my professional opinion. The biggest concern that any investor or bank or financial institution, even HUD, has with condos has to do with what happened in 07-08. If one of those units foreclose, well, guess what? All those other units in that building depreciated in value. Now, if you have multiple foreclosures in that condo building, you're going to see a massive drop in value, where it puts a lot of individuals in a position where they would just walk away from the property because they're like, well, it's not worth it. Why am I paying a mortgage on it? And so, this happened in 07-08. And this kind of prepared a lot of lenders to scrutinize what they're looking for on the condo questionnaire. They want to know how many of those units are owner occupied versus investment. They want to know what the master insurance policy looks like. It's pretty detailed. That's the best way of putting it. So I'm giving you that extra layer of education behind it because I want you to be informed when you hear, oh, the market's going to crash. There's things that make the market crash, in rental moratorium going out of the picture, and people maybe having to file for foreclosure. Because of that, you can see how this information become resourceful, because you can find yourself maybe buying a condo that could be a waste of your time, or just maybe buying a condo that could end up going belly up within a year to 2 years from now. A good home to be looking at to purchase, if you are looking at comparison to condos or homes that require low maintenance, I try to recommend looking at a townhome. Mainly looking at a townhome because a townhome is treated like a single family residence, if you will. There's no condo questionnaire that's involved in it, so you don't need to pull in extra documents to appease an underwriter or anything like that. And it's still low maintenance. They still require an HOA. Both of them can have a high HOAs, and I probably should have mentioned that before. When it comes to condos have, not all condos, but most condos have expensive HOAs. And you got to keep in mind that HOA payment, although it's not part of your mortgage payment, it is going to be part of your qualifications. So if you can afford the mortgage, but that HOA payment takes your debt ratio to a certain capacity, that could kill your deal. So, if you're a home purchaser and you're searching for condos, try to identify what that HOA payment is going to be first before you go through all of this. Make sure it fits within your budget from a qualification perspective, and then, go from there. Let's see, what else we got here on our agenda. I mentioned that forbearance can still be filed up until the 30th, so you guys are good with that. Rent increase up 5.1%. So here are some of my final thoughts, if you will, when it comes to everything that's going on in the market. If you're renting and it's difficult to make your rental payment, maybe your landlord's not working with you hand in hand. Or maybe you're on the other side of the coin. Maybe you are a landlord and your tenants are just not able to catch up. I personally and strongly recommend speaking with a realtor. A realtor is going to be able to guide you as far as where the market is, and if you're a landlord, if you're in a position to sell your place, and is there going to be a profit for it. They're going to be able to assist you with that. I'm sure you know that as a homeowner. However, trying to figure this stuff out on your own versus just having a one-on-one conversation with a realtor costs you no money, and it can probably reduce a lot of the stress that you may have. I'm not a licensed realtor. I do work with tons of them that are out there. I'm a licensed mortgage professional. And if you are renting and you're trying to figure out how am I going to get to the next place, there's down payment assistance that's out there. In fact, I did a video just last week, and I've done a ton of down payment assistance videos, to be quite honest. I'll link them inside the description later. But in Florida, you can get up to $10,000 in assistance. Some programs offer up to 5% of the purchase price in assistance. And so those monies, really all you're paying for is just your appraisal and maybe an escrow deposit, depending on your negotiations with that seller. Maybe you're a tenant and your landlord wants to remove you because maybe he's going to sell the place. Maybe you turn around and buy it. You don't have to move. And you can use down payment assistance. You can use down payment assistance on single family residence, townhomes, condos. The only ones that I know I can't use it on is a mobile home. In some cases manufactured homes, but definitely not mobile home. But for the most part, these are great products and programs to look at. You can go all the way up to almost like $280,000 in assistance as far as purchase price. Excuse me. You can go up to $280,000 in a purchase price, and down payment assistance would still make sense. I still strongly recommend, if you ever have access to your own funds, yes, do use them or use a combination of both. But if you're in a pinch or you're in a circumstance where, hey, money's tight, this is just what I need to do to get my family to a better place, look at down payment assistance. I promise you guys, it's going to be way better than coming up with first, last security deposit for your next rental, only to find out within a year that rent is going to be increased. With a mortgage, that doesn't happen. It's fixed for the duration. So I hope you guys enjoyed some of this information. I hope you enjoyed where the market is at. Please leave your comments, leave me a like and a thumbs up. And if you guys have questions about mortgage scenarios, even if you're working with myself or somebody else that's out there, I want to help you guys make smart money decisions. Outside of that, thank you so much. I'll talk to you guys soon. Bye now.